It's time for the Margin Matters Minute with Money Man Jason Brown.
All right, Jason Brown with another edition of the Margin Matters Minute. Today, I have a very special guest, and we are going to be talking about real estate investing and more specifically, transitioning away from real estate investing. And I want to welcome my special guest, Mr. Joel O'Leary, who is a very popular personal finance blogger and who is also affectionately known as 5 a.m. Joel, which we'll talk about that nickname in just a second. But Joel is a 36-year-old Aussie who now lives in Los Angeles, California. And he actually is the guy behind two very respected personal finance blog sites. The one, of course, 5 a.m. Joel is his personal site. And then he also helps run another site called budgetsaresexy.com. And Joel wrote a very interesting blog, which I printed out here and we'll be going over it. And it's titled Why I'm Transitioning Away from Rental Properties. So Joel, thank you so much for joining me today to share more of your story.
Yeah, no problem. Oh, thanks for the big intro and build up. I'm apparently really popular and all this stuff, but now the truth is I'm just an ordinary guy. So, but thanks for saying all those nice things.
Well, that's awesome, man. And you've been putting out a lot of really good, relevant content that I know a lot of people have been really appreciating. So, real quick, just let everybody know. The nickname 5 a.m. Joel, like where did that come from? I think I can kind of figure it out, but just share the story of how that started.
Yeah, actually it's about 4 years ago or so. I started getting up at 5 a.m. each morning. Started as a bit of a dare with a buddy of mine, and just caught on. At 5 a.m. every single morning, it gives you a couple hours to just get a control of your day and settle yourself and it should change my life. Actually, we're talking about real estate investing today. A lot of these properties I picked up because I got up at 5 a.m. every day and studied a tiny bit about real estate. I read a ton of books. I listened to a ton of podcasts. I evaluated properties. I started bidding on properties, and that's how I started to get going. A lot of people don't real estate invest because they don't have the time. Try getting up at 5 a.m. So anyway, that's where the name came from. That's and great. I still get up early today, and it's a big part of I don't know, my productivity and stuff.
That's great. So the question is, what time were you getting up before you made the change to 5 a.m.?
You know what? Great question. The answer is I was getting up just before I had to go to work. And so if I had a meeting at 9, I would get up at 8. If I had a meeting at 8, I would get up at 7. If I had a meeting at 7, I'd get up at 6. But the funny thing is I realized that the reason I was getting up every day was for work. The reason I was getting up was for other people. And on the weekends when I had no work, I didn't even get up. Like I'd get up at noon, and most people do that. They sleep in on the weekends until, because they got nothing to get up for.
Right.
Well, that's a problem. Instead of getting up for work, I changed it so that I would get up for me every day. I'd get up for my stuff. And so anyway, the number doesn't matter. The time doesn't matter. It doesn't have to be 5,
right.
But the reason matters. Yeah, I changed to get up for me. So that was 5 a.m. Joel.
I love that thought or mindset of I'm getting up for me and not for my job or my work or my boss. I've never actually heard that said that way. And that's really cool. And another thing I'll let you know, Joel, that is also to your advantage is, sleep experts out there, they say, if you can go to bed and get up at the same time every day consistently. So like if you went to bed at 10 and got up at 5 or whatever, but you're getting up at 5 at the same time every day. So that actually is really, really good for your sleep cycle and for your health. Because I think before, like you were saying, you're getting up at a different time every single day. And I don't think that is a healthy way to sleep from all the research that I've done with the sleep cycles and stuff. So that actually, you may have seen some health improvements from that as well. So.
Dude, I mean, we're scratching the surface on the benefits that I've seen from 5. I could talk for hours about this, but I wasn't expecting it. It's not like I went into it thinking, I'm going to change my life. I just went into it thinking this will be a fun 30-day challenge. Let's see what everyone's talking about. And yeah, then it just steamrolled into this, like it's synergy into all these other areas of your life. So yeah, you're right. Health was a big part of that. And late night drinking was a big part of that. Like, I don't know, now that I'm up at 5, I get really tired around 7, 8, 9 p.m. So I go to bed. When I wasn't, I would, stay up and drinking. And yeah, so just all those little incremental daily habits sort of like decline your health. So now I'm on the up and up. So yeah.
Very, very cool. I appreciate you sharing that story. I think that's something that we should all consider. Like you said, no matter what, it doesn't really matter the time, but just be consistent. But let's jump right into, so I printed it out. I got the blog feature here. So we're talking about rental, investment properties, rental properties and stuff. So just give us I know you've been doing this I was trying to do the math in my head. You said you were 36 years old. And I think in the blog, you said you started, I think when you were 18. So we're almost 20 years you've been doing this, right? Almost.
Sure.
So yeah, so you have a lot of experience. So just give us a background on like, how did you get into this? How many properties you have now, et cetera, et cetera. So just share how you.
Yeah. So let's see. So I was just out of high school, and my parents wanted to buy an investment property. They let me and my older brother invest in it with them, and they were actually really mathematical and methodical about it, and they're fairly strict-ish upbringing. So it wasn't like, hey, how would you like to invest with us? It was more like, you will own 25% of this rental property. You're responsible for exactly these expenses. You get 25% of the incoming, cash. You're going to manage the books. Here's the corporate structure. And they're very, very specific about it, which I loved because, well, two things. One, it taught me how to deal with partnerships from the get-go, and like how to set money and emotions and family stuff aside or separate them. And two, it taught me responsibility as well. I feel like other people, when they go into business with their family, with real estate, they're like, yeah, my parents sort of just gave me some of their property, or they told me it'll be mine one day, or, oh, if I don't cover the mortgage, they'll cover the mortgage.
Right.
There was none of that in my first property. So yeah, that was sort of the kickoff. But I don't know, I guess seeing is believing when you're a young kid and you start investing. When you see your money start to grow, you're like, I want to do more of this. So that's sort of how it grew into more and more properties. And then sort of sold a couple along the way. Today, as of right now, I've got 10 real estate investments. 5 of them are private partnerships that are in large apartment complexes. They call them syndications. And then 5 of them are physical rental properties that I sort of manage personally with a property manager. Yeah.
Okay. Now you started this, I'm assuming you started this in Australia when you were living over there?
Yeah. So I've exited Australia now. I don't own any property over there.
Okay.
And yeah, so right now it's only US. And that's really where things started to actually kickstart. Australia is a little different than the US. It's the rent to price ratio is all out of whack. It's very hard to find cash flow positive properties because the rents are pretty low. And then, the way they work out their loan structure and stuff like that is a little strange. A lot of people do variable interest rates and things. So over here, when I landed in the US and I figured out you can get a fixed loan for 30 years, that's insane, at a cheap rate and all these tax benefits. Wow. And you can have rents that are high enough that will cover all of the expenses and fees and all that. All I have to do is come up with down payment. Wow. So I sort of, let loose on acquiring some of these properties, and it just started, working really well for me. And so, US is a great place to invest in real estate.
So how long have you been in the States, Joel?
About 10 years,
okay.
Maybe a couple of years longer than that.
Okay.
Met my wife over here. We got married about 5 years ago, a little over 5 years ago. And we settled in Los Angeles to be close to her family.
Okay.
So that's why we're here.
And now your properties now, are they all over the country, or are they just in Los Angeles, or whereabouts are the locations of?
Yeah. So when I moved to Los Angeles, and this is where I really got the ball rolling, everything was so expensive here.
Oh yeah.
And again, kind of like Australia, the rents aren't really high enough to cover all of your property costs.
Mhm.
So not for buy and hold properties specifically. So I sort of looked at different states. I chose Texas as the state that was like fastest growing at the
Right.
time. And the bulk of my research was done in like 2014, I would say. And Texas was crushing it. And they still are actually, and out of the top 10 cities, growing cities in the US through 2014, 2015, I reckon the top 4 out of the 10 were like Dallas, Austin, San Antonio, Houston. And so I was like, I'm targeting that area. I'm going to start making calls and start to figure out like where I can buy these places. And yeah, the Texas has some pros and cons, as far as no state income tax and things like that. Some of the downsides, their property taxes are ridiculous. And so anyway, that's sort of my research into Texas. I found a local area and then started buying the properties from there. And specifically, which I should probably tell you, is they're small multifamily properties.
Okay.
My original thought was to buy a single family home. And I think everyone's is to start with. They're like, I'll buy a rental property. It's not a $2,000 goal. It's just like, I just want one. I'm not going to be greedy. And then you start to figure out there are duplexes out there that are actually just a little bit more expensive than a single family home. And you can run them like a business, and they're very flexible because you can have 2 tenants inside, or you can move into one side of it or whatever.
Right.
And you can get a loan on it as if it is a single family home. It's sort of like classified as a residential real estate. It's not, a business loan or commercial real estate. So I was like, ooh, when I stumbled across multifamily, small multifamily, I was like, ooh, I like this. Duplex, triplex, fourplex. I was like, I'm going to go after those. So that's all the physical buildings that I own right now.
Very, very interesting. Now, one other question. Now, do you have, I think you mentioned this, do you have a property management company that manages your, I guess, portfolio, or are you doing, I think you explain that, like, are you managing some of these yourself, or do you have a company that handles all that for you?
Yeah, because through some other rentals, I figured out that I'm a really shit landlord. I'm not great dealing with people. Excuse my language. Also, I didn't want to like be the one accepting those phone calls late at night and all that,
Right.
drama. So I hired a property manager who deals with all of those. The cool thing is actually I spoke with property managers before I even found the places I was going to buy. A lot of people do it the opposite. They buy the place and then they call a property manager and they're like, manage this. I did the other way around. I found a property manager and I was like, hey, which places do you love managing the most? I'm going to buy those. And so they helped me get into these properties, which is awesome. They know the rents better than anyone else. They know the tenant types, the trends better than anyone else. So property management really is like the backbone of your buy and hold business. I don't care what anyone says. They're worth every cent. And if you do the numbers correctly, you can include their fee as part of your expenses and have it covered by the rent. So you can still have cash flow positive properties with property management in place, even though they, are expensive.
Very, yeah, that's a really excellent strategy and a very good tip and advice for anybody who would be considering getting into rental property investment. What you just said, that is really, really a good tip that I have actually never heard before. So it makes perfect sense to me as well, because they're the ones that are going to know, like you said, the trends, that they're going to know what the hot markets are, what's going on in their area. Especially
yeah. So if you think about it,
out of town.
yeah. So do you have a target area? Because you said you're looking to maybe buy or something, right?
Yeah, you're in Los Angeles. I'm actually in Atlanta, Georgia. So we're the capital of the South. So Atlanta is a big, I'll let you, I don't know how much you know, Joel, about Atlanta, but Atlanta is a big, big rental. The rental rates are very high here.
Yeah.
You can go buy a house and have a mortgage and pay much less for a mortgage than you would for a 700 square foot 1-bedroom apartment So the rental market is big here, and it's
Yeah.
expensive.
Actually, so a lot like Los Angeles in that it's massive. It's like massive. And then also you're like they call it like a pizza where there's sort of like rich areas and poor areas
Right.
sprinkled all over the place. And you have to be very, very, micro when you're looking at this stuff, because you could have like $1 million street where all the houses are $1 million, and then your very next street over is like ghetto. So it's tough for out-of-state investors to jump into an area like that and just know exactly what's going on.
Right.
But yeah, it's sort of going back to what you're saying. I think a lot of newbies, they'll pull up, they'll ask their friend, hey, you got a realtor? And they'll be like, yeah, call this guy. So they call this guy and they're like, hey, I'm thinking about buying a rental property. And the realtor's like, sweet, here are 5 houses that are available right now. But what they do, and their job is to sell you the house. Their job is to handle a transaction, sort of like a once-off transaction for a realtor. And it's not that they'll lie or anything. They want to get you into this property, but they don't really typically have a lot of experience in buying and holding and managing these properties ongoing. So they will tell you things like, we think this house will rent out for this much approximately, but their estimate will probably be on the high end because they're very optimistic. A property manager, however, will tell you, I know exactly how much that place will rent out for because I've placed tenants in the neighbors' houses for this exact amount. Here's their lease type, here's their lease date, here's what they'll do to your property when they're in it. Here's who likes dogs and who doesn't. Here's what you should offer them as far as amenities. Here's how to stay competitive against the other rentals out there. They're just like this fountain of information. So yeah, if you can get onto a property manager before you get onto a realtor, that's how I did it.
That's great. Yeah, that's really good advice for sure. Now, I'll give you a little back. I know we were talking before and we've been emailing about this subject for a while, the two of us. So I'll give you a little bit background myself. And this is the reason why I wanted to reach out to you for this interview was, so I'm the guy, I actually have a lot of friends like you, Joel, that are big time property investors that have a lot of, either single family homes or duplexes, like you mentioned, that I've always kind of brainstormed with or kind of picked their brain, like, how are you doing this? And I ask them all the same questions I've been asking you. And, what are the nightmare stories? We all know the nightmare stories, but I've never actually, me personally, I've never had, I guess, the guts to pull the trigger and just buy a property to try to rent it out. I just haven't kind of got to that point yet. So that's, and of course, another little bit more back. I live in a condominium complex here, actually, just north of Atlanta in a city called Roswell, Georgia. And so what I do is the association actually allows for 20% rental. So what I do is I watch all my neighbors try to rent their units out. And I just see how difficult it is. And I see, all the horror stories that happen to them. And I'm like, maybe I'll hold off on that because it doesn't seem like it's worth the hassle that these owners are dealing with. So I was really intrigued by this blog. And so one thing, Joel, I want you to kind of break down, and you break down in your blog, which was really interesting, is you compare investing in the stock market versus investing in real estate, right? So talk about a little bit of the research you did. It looks like you did you went back 15 years and you kind of did like a side-by-side comparison of if you took, X amount of dollars and you dumped it into real estate versus dumping it into the stock market, what the returns were. Do you remember writing about that?
Yeah, absolutely. I think first I want to be a little bit clear on definitions, because here's where I think some people get a little confused. Real estate and, well, even stock market investing, they're completely separate asset classes, but within those like classes, there's actually several different strategies within them. So when we talk about stock market, are you talking about index fund investing? Are you talking about day trading? Are you talking about buying and holding a specific stock? Are you talking about dividend investing? Like, there's so many strategies. Same with real estate. You talking about house flipping? You talking about Airbnb, like vacation rentals? You talking about buy and hold rental properties? You're talking about commercial real estate, REITs. So I'm not transitioning out of real estate. It's not that I believe that real estate isn't going to perform as well as the stock market perform. It's that the strategy that I picked, which and hold rental properties, I wanted to buy just for cash flow. I just wanted to collect the little cash flow. I wasn't trying to make $1 million overnight in a hot growing market. I wasn't trying to flip houses. My strategy was just to buy and hold. My strategy, I don't think is working out for me. So that's why I'm taking a step back. And one of my realizations was I looked at that strategy over 15 years, that very first place that I bought in Australia, and I worked out that my average return approximately was like, I don't know, 9.5%, something like that, year on year return. And then I looked at the S&P 500 returns over that exact same period, and I realized that if I just put my deposit, my down payment into the broad index fund instead of buying that first rental property, I would have made about the same return. And that was kind of like a shocking thing because I thought, man, if I'm getting the exact same return, but one of them I'm doing a ton of work, the other one I'm doing no work, wouldn't you want to go with the no work and the less riskier strategy? And then I even started thinking this, even if my rental property outperformed the stock market by 1 or 2%, is that even worth it? So if I make an extra, I don't know, 10 grand over 10 years, but I have to like bust my balls for it, is that even worth it? And at this stage in my life, I can say probably no. I'd rather go with the easy passive strategy than going and doing all that hard work for the same or a little bit better return. So does that answer your question?
Yeah, you provided a really good clarity. Yeah, because that's what you cited in your blog. You were talking about, if I invested my cash in the S&P 500 instead of buying rental property. So so you're right. It depends on what you invest in. For that specific example, you were talking about the S&P 500 over, I think, a 15-year period. And it came out even. Yeah,
that's right. And I love doing these comparisons. I think everyone's really interested. But they also, they generalize it too specifically. They say stock market or real estate. Well, it depends on what strategy within that you're picking. So we can afford to, like, if we're really going to compare, let's be specific about what we're talking about. And also in that article, I said, hey, everyone, I'm not anti-real estate. I really don't want to discourage you from buying a rental property because it could be awesome for you. It really could. And I can even teach you how to do it and be awesome and learn from all the shit mistakes that I've made.
That's true. You definitely you could have a class.
Sure.
You could,
how much are you going to pay me now?
Exactly. Yeah. We'll get an online class going.
No, but I'm thinking, my other reason that I put in there was, or another dot point was that I'm not exiting real estate. I'm just exiting a couple of my rental properties. And that's not the same thing. In fact, I want to get into more real estate, but just in a passive, more well-researched and professionally managed way. So anyway, that's it. So it is a transition. But when I tell everyone I'm selling some rental properties, they're like, what? Why are you getting out of real estate? Oh, is real estate a bad investment? They jump to all these conclusions. So I wanted to detail this post about, like, what? No, here are the reasons, and within some dot points why I'm getting out. And so
and that's exactly what my reaction was too. I was like, wait a minute, I thought this guy was a big time investor. Now he's saying he's getting out. Let me read this blog real quick. But actually, Joel, that's a really good transition, because what we're going to do is we're going to go through, I think you cited 7 reasons. You said, here's the list of some of my reasons why I want to slowly transition away from rental property. So we'll just go through each one, and you can just kind of share some of your thoughts.
Before we get to that, do you mind if I just give you just a very basic background? So obviously started real estate when I was, like, we'll call it super young, because 18 years old, I didn't know what the hell I was doing. But I also had, my grandpa was big into real estate. He had a couple of rental properties. He was a realtor in Australia. My uncle was a mortgage broker in the US, actually. And he had a handful of rental properties as well. I don't know what it was with my circles of success down in Australia. They all were talking about real estate. So I've just been heavy in real estate my whole life. So when we talk about these reasons, that's the background that I'm coming from. It's not that's the reason why I have so much real estate is I just never knew there was another way to get wealthy, because I never took the time to study it. Pretty immature mindset of me. I just had a one track, very, narrow-minded approach to building wealth. So now I'm taking a step back and just looking at a bit of a larger pie, and educating myself on areas. So that's just a bit of a preface to what we're going to talk about.
That's good. No, that's really helpful for the viewers to know, because I think you mentioned in the blog, and we'll link the blog in the description below so everyone can read the whole thing. But you talked about it. It's pretty much like a family thing, a family business. Your grandfather, I think you talked about maybe some uncles and some other family, that they were all in this, and that this is what you grew up. This is like the only thing that you grew up knowing and just consuming yourself with. So absolutely, that's
so really it's real estate is highly addictive and it's very encourageable as well. So when you're young and you buy a rental property and you say to your friends, I bought a rental property, they're like, oh man, that's awesome, good on you. They have no clue whether you're making money or not, but they're like, that is so cool. It's like a status thing. So you're like, ooh, that was cool, maybe I should do it again and again. You keep moving along because you keep getting this positive encouragement from people and mentors and all these old folks who are like, you have 3 rental properties and you're only 30 or whatever your age is. Like, they're going to say, congratulations, that's awesome, what's next for you? So it's kind of like positive reinforcement just over and over and over again.
All right. Well, that's good. That's real good clarity for everyone to know. So let's go through the list that you cited. So the first one is, I don't really find it fun anymore. So, and you've already kind of touched a little bit about this already, but what more can you share about? I know you talked about it being work. So what are some things that are not fun about?
It's not that it's not fun. It's just that I find other things fun now. And I believe that if you have a passion in something, you will go above and beyond to solve problems, to learn it faster than anyone else, and you'll succeed because you love it. I used to feel that way about rental properties. I loved evaluating them. I loved talking to people about them. I loved networking with people about them, reading books about them. It was all about cash flow. It's highly addictive. I used to dream about these types of things. For fun, I used to go sit with a buddy and we'd pretend that we were going to buy an apartment complex and run the numbers on it and stuff, like all this nerdy stuff. I don't do that anymore. I dream about other stuff. I have changed a bit as a person. I don't want to make a bunch of money and get ahead in real estate and be this, own 100 rental properties anymore. I really enjoy learning about and teaching personal finance, these very basic topics. That's what I want to chat with someone at the pub about now is, how to budget better, financial independence, freedom, travel, things like that. So my heart's not in it anymore. And so I guess my lesson for this and my pitch to all these new people out there is, if you don't love it, you don't have to get into it. I know if you don't really, really, really want it, consider not doing it. And even for you, Jason, there's a reason why you haven't bought a rental property yet. And it's probably because you're already satisfied with all your other investments and things you've got going on. That's okay. You don't have to be part of the people that own real estate. It's not that, it's not as fancy as it looks.
And I will say real quick, I actually forgot I was going to mention this at the beginning of the interview, was I wrote a book about 2 years ago, personal finance, a how-to personal finance book a couple of years ago. And after I wrote that book, I was kind of submerged in this whole world that you're in, the personal finance world, which I didn't even know existed, this whole subculture that I've been kind of submersed in by writing this book. And I was just overwhelmed with the amount of people in that say real estate. The number one, passive income stream is real estate. You got to invest in real estate. That's all I heard about. So I was like, maybe I should, do this. And so that's why I wanted to, this is why I wanted to do this interview with you, as well as reach out to other people who have done it. I was like, am I missing something here? Like, this is the overwhelming consensus by all these people. And I know you know it too, because you're in this world more than I am. So that was another reason why I wanted to kind of have this. This has been a great conversation so far and very educational. So
Oh, cool. Yeah. So like, you don't have to go buy a rental. I'm not encouraging you not to. If that is your goal and you really want it, go get it. But do it for your reasons and for the reason that it's fitting within your grand retirement strategy.
Right.
Don't do it for the reason of you sunk 2 years worth of research into it, or you've been talking about it for so long, you may as well pull the trigger, or you think you're in analysis paralysis, and or you're old enough now that you should probably have a few properties on your belt. I hear these reasons and I'm like, that is no reason to go and buy real estate. Search within and look for your why. If you want to go and buy real estate, let's get serious and help you do that. I can help you do that. Right. So, but yeah, if you don't, that's totally fine. You're going to be rich regardless because you're already investigating the right stuff. So
very good. So let's go into your next reason. You said trying to better adjust my asset allocation. So explain what in the world does that mean? Your asset allocation.
Well, let's put it this way. You don't want to put all your eggs in one basket. Right. Because I was so heavy real estate focused from the beginning, I don't have a whole lot of other assets. I don't have a huge stock portfolio. I didn't contribute to my 401k for a long time. So I'm missing out on all this stuff that other people have a lot of. And so I need to just rethink my balance. My other issue is, hey, did you know that there was a massive storm in Texas a couple of weeks ago? And did you know that it was Arctic temperatures there? And did you know that everyone's pipes started bursting and people started dying and there's water issues and mold and stuff like that? And did you know that all of my properties are actually in Texas? That's not good. Why did I put so much of my net worth into one specific area? And so anyway, just little things like this that are hitting me where I'm like, oh, you know what? That was actually really risky. What I thought was going to be more diverse and having, multiple properties and multiple units within the properties actually wasn't that smart. So anyway, I just want to try and grow the other side of my retirement plan, which is, index funds and some other assets.
That is a very, very cautionary tale that you just said, Joel, about having all those properties in Texas and what, that's probably a once in a decade type storm. I think a just devastating storm that has really done a lot of damage to that state. And I'm sorry to hear about your properties being damaged, but
no, it's okay. That's what insurance is for.
Absolutely.
So insurance claims and things like that. I got off pretty light on a lot of my places. No one died in any of my units, so that's good. So other people had it much worse.
Right.
But those are just reminders where I'm like, oh, I had my head down just collecting eggs in my basket, and they were all in the same basket. And
that's a very good, that's just like you said, that's kind of one of those, like a moment to take a pause, right? And just think like, so that's a really good, it's a really good thought. So let's move on to number 3. And you actually talked a little bit about this one already as well. You say it's more work than I thought it would be. So what specific examples? Oh, I guess the Texas example might be, how much work are you, how much, I guess, what is this causing you to deal with? Like,
a couple of things. First of all, I should say that I'm not afraid of hard work. I actually like working really hard. But when you're on the path to financial independence, you start to figure out, like, I want to decide what type of work I want to do and what type of work I don't want to do. Mm-hmm. And I like fighting fires and problem solving sometimes, but it gets a little bit repetitive again and again and again. Tenant issues, I don't want to deal with them anymore. I don't like them. Some of them are bad enough that my property manager has to come to me and we have to figure out a solution together. So those are the types of things that are weighing me down a little bit. But before you even get to owning or managing or co-managing a rental property, there's a ton of work up front. And before you buy a place, you've got to do all of your due diligence. There is a ton of work involved. And then even after you've bought it and you're onto your next one, you still have to do all of that due diligence again, plus all the things that you forgot or didn't know about the time before. So the work really never goes away. It's just the more you learn, the more you get into it, the more you realize you don't know. So anyway, it's exhausting. And then also managing the manager has a little bit of, the property managers do the bulk of your work, but you are still responsible for everything that happens. So you can outsource individual activities, but you can't outsource overall responsibility. You are responsible for what happens. So I'm pretty involved with what goes on in my places. I want to know what's happening with the money, what's happening with all the little expenses. I want to make sure that I don't miss anything. Anyway, all of that adds up, and it's just mind share that I wasn't kind of expecting. Kind of like you heard that, like, passive income, it's the best passive income, passive. Get into real estate, it's passive. Yeah. So anyway, I maybe tricked myself into thinking that it was going to be less work than it actually turned out to be.
Gotcha. Yeah, that's good. Real good feedback on that one. Now, the next one, I'm not quite, well, I think I know what you mean. You said, I own a couple of subpar performers. Now, I don't know if you still have those or not, but you can kind of update on what exactly you were referring to there.
Yeah, sure. So like with each property you buy, you're going to do an analysis on how much you think it's going to make. And then you're going to be wrong on some of those, unfortunately. I was, and I'm man enough to admit it. So I'm going to backpedal a little bit. A couple of those I was right on, and they're great properties, and at least one of them I really want to keep forever. I love it. It's performing very well. I bought it at a great price. So those are the ones I want to keep. But if I'm going to sell some, I'm going to sell, the ones that aren't generating a ton of cash flow for me. So I also like I said, I want to be man enough to admit some mistakes that I've made. A couple of places that I bought were purchased at great prices. So if you buy under value, you make a ton of money in that first year. If you buy a property that for $100,000, but it's really worth $200,000, you've just made $100,000 in 1 year. Mm-hmm. Now, if it only makes you $1,000 every year after that, is it a great investment to hold on to? No, you should sell it and move on to something else. So there's the buy part, and then there's the hold part. I calculated the hold part wrong. So that's where I'm trying to transition out, because they're not as high cash flow as I thought would be for the long term.
That's really good.
Does that make sense?
Yes, that what you just said, the buy part versus the hold part is that is.
Well, you hear a lot of people saying you make money when you buy. Well, what does that mean? Well, it means that if you can negotiate a killer discount when you actually purchase a property, there's a ton of value that you can there's a ton of equity that you realize on day one. On day one of ownership, you've just made yourself $20,000. But if you're only then making a very small return year on year, then why hold on to it? It's kind of like buying, it's kind of like buying a stock right now that shoots up overnight and doubles in price, and then has very average returns over the next 10 years. Why not just sell it and move into something that has better returns? So anyway, that's kind of what I meant about that dot point.
Right. Now the next one, I'm going to need you to explain a little more. It's just, you just wrote emotional simplification. So what in the world are you talking about there? Do you remember what you about that?
Yeah, so let me see if I can pull a story here to tell you. So the tenants that rent from my property have have some sob stories that
Oh, right.
used to not bug me as much. I think I used to be a great landlord. It's being a landlord and owning properties is cool. You're making a deal with someone. You're providing someone a house for a market rent, and you're providing them a safe house, and you're going to fix the things that go wrong with that house, and you're helping them get on their feet, save money, and hopefully buy up a house of their own one day. Maybe they're transitioning. You're helping the tenant. Now, in turn, they're helping you. They're paying you to live there, and you're hopefully money from that. So it's a win-win. So I'm proud to say that I own a bunch of real estate, because I do that. I'm helping a lot of people out there. With that being said, it's a sad story when you're looking into a lot of these people's lives. So there's 20 there's 20 tenants there in that they all went through a storm a couple of weeks ago, where
Right.
they're freezing with no water. They can't, and you know that comes with a bit of baggage, emotional weight that I can't. I don't know if it's me just getting soft as I grow older, but that's what I'm about weight. So yeah. Anyway, does that? I don't know. Does that
Yeah,
describe it?
that makes it. It sounds like it's becoming maybe a little too personal, right? It sounds like it's becoming a little too personal for you, right? And maybe less business,
Yeah.
more personal, because you want to be there. You want to have that relationship with the tenant, but there's a fine line, I guess, you don't want to cross, where, like, you're the landlord, they're the tenant, but when they come to you with issues, and which you may or may not be able to resolve, but you take a lot of that, either personally, or you take a lot of it to heart, and you want them, you of course you want all your tenants to be happy and love living there, but it sounds like that maybe the stress of all of these maybe requests that you're getting, or problems or challenges, are maybe weighing on you a little too much.
You know, personal change I've been going through the last 3 or 4 years, and that is so when you're in abundance of anything, you typically you share it. If you have you can't eat 50 apples in the next few days, you're going to share them, because there's too much for you. I'm in a position of abundance. I've got more money than most people. I've got more assets than most people, and it's not. I'm not ready to retire or anything silly like that, but I have more than most, and I'm trying to share it. If I can't share it, I'm going to share it. At least I'm going to try and help people get to where I am, because I figured out recently that apparently that's the secret to happiness, is to like help other people, and that's the secret to success. So anyway, as a part of that, I continually wonder if there's more that I can be doing for these people than just providing a shelter and getting paid for it. And anyway, before I go and buy another 5 rental properties, I want to figure out if there's a better fit for my purpose in this world. So anyway, that's probably more than, but that ties in with an emotional, like, I don't know, weird I'm going through right now.
I hear you. Yeah, I totally. I can kind of see what you're saying now with all that. So let's move on to the next one, Joel. The next one,
Sure.
you talk about. You say my relationship with cash is changing. So cash in quotation marks. So your relationship with cash is changing. So what?
Yeah.
What's
So
going on there?
when you have cash reserve, so and the amount of reserves that you have is dependent on your risk and how much you want to, and how much you want to like be emergency. So property, let's just say you have to have, I don't know, $10,000 in reserves. 2 rental properties have 20,000 of 4, 5, 6. This grows and grows and grows. A lot of people say, no, well, you don't need that much in reserves. Well, you kind of do, right? You got to have an emergency fund per rental property. So when you get up to like 10 rental properties, you might be sitting on 100 grand in cash reserves. And 100 grand might represent, I don't know, pulling numbers. But like, wouldn't you want that money invested and actually working for you? So it's got me thinking the other day. I'm sitting on a ton of cash, and just to buy a new rental property, you've got to go and like make a ton of cash and store it in cash and have it ready to go spend. You can't go and invest it or be risky with it. So anyway, I just got me thinking, why holding so much cash all the time for no, like, I don't know, it's for insurance purposes. I want to invest it. I want to get it away from me. My relationship with cash is changing. I used to think it was cool to have heaps of cash stored up, but I'm losing a ton of money. And so anyway, that's sort of what I meant around that. And also, it sort of ties into just being less risk averse as well. I wanted to, when 2020 hit last year, I had a fair amount of reserves. I don't know, like 100 grand cash, maybe more. And suddenly, overnight, it felt very, very, because if everyone didn't pay their rent at the same time, I'd run out of money just using my emergency cash. I'd run out of money in like 6 or 7 months. And then I'd be completely destroyed.
Right.
So I think, well, I need more cash, bigger emergency funds. And I don't know, it just shocked me into thinking, man, this cash problem is weird. Whereas when you're investing in other assets like index or something like that, you need to keep cash. I mean, you can keep cash on the side for you can invest in bonds and things like that. Yeah. So anyway, I'm just saying, like, my cash problem can go away if I sell some of these rental properties. Right. I can start to invest in emergency funds and live a little more streamlined.
Right. Okay, that makes sense. Yeah, that's a good explanation on that. Now, your last and final thought on why you are transitioning away from real estate is you said, I can always buy real estate later and in other ways. So explain a little bit about that. What would some of the other ways be that you were talking about?
Yeah, sure. So and sorry if you hear my dog barking in the background. Obviously the mailman's here. So
there you go. Okay.
Yeah, sorry about that. Okay, so there are other ways to invest in real estate that doesn't carry emotional baggage, cash reserves, and all of those things that I was talking about. And I guess I wanted to tell everyone that although I'm stepping away from rental properties now, that doesn't mean that I'm not going to go pick one up in a couple of years when it does fit my strategy. I guess I'm just taking a step back to learn. One thing I stumbled across a couple of years ago are these private partnerships. They call them syndicates, and they're groups of real estate investors that get together and pool their money together for a very large, well thought out project. And that's what I'm more interested in now. And I've been buying into all of those partnerships. You basically, you invest your money into this as a limited partner, and the general partners put together a project where they either buy one or two or however many large scale real estate projects, and then they basically just pay you out as dividends as an investor. So that's one thing that I've been exploring, and it's working out pretty well. So that's one avenue. A couple of years ago, I tried to flip a house. I thought that was pretty interesting. I worked with a partner. Again, he did most of the flip stuff. I provided the capital. I obviously reviewed all the numbers and made sure I was okay with the project, but he was the boots on the ground managing the whole thing. That was great. We made an awesome return very quickly. It was like a 90-day turnaround, and I really enjoyed over the process. So anyway, I guess sort of what I was going back to before is, although I'm exiting rental properties, doesn't mean that I'm exiting real estate.
Right. Well, that's good, Joel. Well, Hey, I really, really appreciate this. Has been very educational and informative for me, and I hope all the viewers who may watch this learn at least one thing from this conversation. So before we leave, Joel, just any final thoughts? Any advice for someone like me who may be considering, just considering, maybe picking up a rental property to try it, or advice for someone who, like yourself, who is a property manager, and what maybe some advice you could give them moving forward. Any final thoughts, I guess?
Yeah, sure. Two. One is start with the why. Why do you want to get into it? That'd be my first question for someone like you. Is all right. Before I help you, I want to know, what are your reasons for getting into it? If your reasons are to make money quick, if your reasons are for greed, if your reasons are for revenge, if your reasons are to show off, if your reasons are because you think you're missing out, then I'm going to tell you you're probably in it for the wrong reasons, and you're maybe likely to fail simply because it's not the right reason.
Right.
So anyway, start with your why. You don't have to go do something just because everyone else is. And the next advice that I would give is take your time, because real estate will always be there. You're not going to miss out. Real estate, like deals, I can't remember who said this, but deals are like buses. If you miss one, there's another one that comes up 10 minutes later. So I'm not saying evaluate for the next 10 years, but I am saying it's okay that you don't get in right now. I think everyone's so, they want to get in at the bottom of the cycle and before the boom and all this stuff. Get that out of your head. Real estate will always be there for you to buy. There will be dips and peaks and valleys and all that good stuff. So it's okay that you miss out on something. Be patient, wait, calculate it properly. There is no rush. That would be my parting advice for newbies.
Well, that's awesome, Joel, man. I just want to thank you so much for your time today, Mr. Joel O'Leary, aka 5 a.m. Joel. And if you want to check out Joel's websites, you can go to 5amjoel.com. That's 5, the number 5. And we'll link these to the description below. And then also check out Joel's blogs on budgetsaresexy.com, which is a fantastic website as well. There's so many great resources on that site that you can find about anything to do with money, budgeting, saving, investing, etc. So we'll link all those to the description below. And then if anyone wants to follow my endeavors, my website is yourmarginmatters.com. So I appreciate your support. Thank you so much, Joel. And until next time, this is Jason Brown saying to remember, it's not the amount of money you make, but the margin that matters the most. We'll see you next time.